what Uganda will be in 10 years from now, or where it will be. Right now, all of us can easily be like, we know maybe in the next 5 years, and when you're speaking realistically, I can easily be like, in the next 5 years, I think we are okay. But past 2031, we are starting to see darker cloud, right? So if you invest in a 5-year bond, it means you're taking an easier route out. You are taking a shorter term risk. Me, if I invest in a 25-year bond, I'm betting on this country for the next 25 years. The benefit I get is I pay less tax on the risk I'm taking versus you who's taking a shorter term return, a shorter term risk. It's that. So, and I know that introduces in the concept of politics of the day. When I talk about treasury bonds, okay, I was talking about this form which I brought up. I know I'm going to be moving up and down. It's a simple form like this. How many times do we spend on our phone when we are replying to whatever we don't need to reply to? Or watching things we don't need to watch to? Now, this is my concept, right? And my behavioral pattern. I can come here and I teach you about the numbers that make sense for you to start looking at treasury bonds, where they make money and how they can beat almost every investment you think about in Kampala. But that is just 20% of what it takes. The other 80% is so much what you are and the behavior you're going to apply in, right? Now, the abstractness of Uganda that we do not have the technology to make things easy is maybe that's why we are getting a 17%, because nothing works in Kampala. That's why, that's the benefit, that if we are to wake up and we are like, US, we shall be getting a 4%. That's why South Africa, which is way much better, which is closer to US, they are getting an 8%. They are not getting a 17%. That's why Kenya, which is ahead of us, they are getting a 12%. They are not getting a 17%. So that disorganization we hate about home is where the money is. So that behavior where you know every single month you're going to have to fill up this form. And this won't... Okay, I'll stay here. I always forget.
Yeah, that's what
I think it's the projector. Buli kintu kibaako omugezi waakyo, Buli kintu kibaako omugezi waakyo. I'll stay here. I'll try to stay here. Okay. Yambuse waggulu ebadde erabise bulungi. Otuso gikwata. So the disorganization, but think about, like I said, this is what I look at, right? The account number will never change if you have one bank. The bank settlement bank won't change. So the only thing that are going to change is your bank account and the maturity period of which bond you are buying every single month. You don't need to change anything whatsoever. So that means even in the disorganization is where you make the money. But that's not where the money is. The money is here when it comes to treasury bonds. Abatabaddewo, you missed out the USD UGX equivalent, which I think now, if you listen to that, now it has settled in a little bit of pressure. But here is where the money is. Whether you like it or not, our country is poor. Whether you like it or not, our country is still a third world country. Whether you like it or not, the capital that still goes to Uganda is non-Ugandan. In September, on September 4th auction, government sold close to 1.4 trillion. And people were like, oh my goodness, this is too much money. Then later when the data came out, we realized close to 200 or close to like $400 million was international money that entered Uganda to just grab on what the Ugandan bonds are. Two things you can learn from that. For as long as the money that is still entering the country is not by Ugandan, it will demand a premium. Because think about it. Here, when you're investing in the US, even you yourself, you're comfortable to buy, you're comfortable to buy a mortgage. You can calculate and say this mortgage is, by the time I'm done paying it, and if I can access cash fully, I'm going to pay it off. I'm going to pay $300,000. And you rent that house at $1,000 a month. So, but you are comfortable. You're like, what's the return there? 5%? But no one will bother you because you're like, I'm investing in the US market. And I know the houses here, they appreciate in value. Even if when you compute them, that appreciation ends up creating for you a total return of 7-8%. But because you are investing in the US, the comfort that you have something in the US is uniquely different. Bogende Kampala. Like you start demanding something higher. Why? Because like everything in Uganda looks virgin. It demands a higher price. So if the international investors that are known to Uganda are willing to send 100,000, if I talk about it, you'll be like, Kakande, you are lying. Let's look at it. This 20-year bond is one of the most sought after bond. You can see it. I know that light makes it where you can't see it, but I know if you try to stand up, you will see it. It's a 20-year bond, right? And it's one of the most sought after bond because right now it can give you a yield of close to 17%. This data is not mine, it's live data. This is Reuters Refinitiv. Those who trade would know it. And it's active. So let's give it a second. And you see what funds that you can easily recognize own that bond that are not Uganda. When we talk about that the government has sold that in the recent auction, there they are. Majority of them, I'll open some of them and you look at what everything is. But I can open, I know this is AUD, this is the, I know it's the Dubai bond. Right now, the Dubai guys have bought so much bonds in Uganda. I'm wondering what they have seen in us. It's incredible. It's incredible, by the way, the amount of bonds they are buying. But when you look at the international investors investing so much money almost every single month, every time you read the news or you are watching Kakande's video and he says the government has sold the 1.4 trillion, the Ugandans, who are Ugandans one by one, will buy like 30 billion. The banks and the NSSF and the likes, they would buy maybe 400 billion. But they are buying using your money that you are leaving there as a deposit. So they are making the money as for you, they charge you commission on having an account in their bank. The rest of the money is international investors. So I'm going to open just one. I believe this might be the Canadian. This is an ETF. This is it's an ETF, but it's a fixed income index fund, which is based in Canada. But 79% of that money, whatever the Canadians, and I know these most are owned by the pension funds, 79% of that portfolio is a Ugandan bond. And someone in Canada is a Ugandan. Kampala. Aina pension in my pension fund. The pension fund is sending the money home to get a 16%. Why? The pension funds understand the risk they are playing with. That if I send $1 million in Kampala and I lock in an 18%, in 4.5 years, I have got my capital. So that means the other 15 years, I'm just getting my profit. I'm betting that even if that country goes in the total disorganization and they recover in 3 years, I'll make my money for 17 years to go. Wow. Simple math. So let's open a second one before I come to your question, because if I show you one, you'll be like, Like I said, this is not my data. It's clicking. Let me look for one here in the US which you can recognize. I think this is Hong Kong. This is Hong Kong. Now think about someone in Hong Kong. Somehow they have whatever their portfolio is for this. These are ETFs. They have 14% of their portfolio in a Ugandan bond. And for you are saying, Kampala Stress and Kayo send, Guainayo ne family. Just take a set of government bonds. Government have 7 yen, right? I want to get a USD, which is here, which you can easily go in and check. I know sometimes they hide them. This is GBP. These are active traded fixed income mutual funds and ETFs on these international markets that are sending money home every single month. Why? Guys, 16% is very competitive in something that you are sure the risk is in 4 years you'll have your money back. So when you sit back and be like, what? I ask myself this political question. What is my insurance that I will forever be paid? I have two things. The first one, it doesn't matter who is going to be in leadership, whether I like it or not. If you have money back home in any commercial bank, or let's imagine for someone back home, because when you're this side, you have a balance of life. But someone back home, all those people, over 40 million of people back home, all they have is in Uganda, right? And they have money in banks. Many people, billions and billions and whatever they have. The day you realize no bank can survive a bank run is when you understand how banks operate. That if I have a bank and I collect 10 of you here and you give me your capital, chances you give me that money in cash, but I'm mandated to have literally minimum 10% of that in cash. The other 90%, I'm going to deploy to invest for me to make money as my own bank. And in Kampala, 40% of that money is in loans. The other 40% is in treasury bonds and bills. So that means for whatever person that will ever be in power, they understand for you to default on the treasury bonds, you are crushing that economy. That's one. Two, don't think about it from you who is here. Think about it someone who is in Kampala who has worked for 20 years. Just as you can imagine one person. They have been employed. Let's first put the informal sector aside. Let's imagine, like my friend here said, Haji Kachika, been employed for close to 20 years, right? He's my friend. I respect him, by the way. We disagree on principles, but think about anyone you can think of in Kampala. That means they have been contributing NSSF to so many people. NSSF is their lifeline. NSSF recently published their report of it's a 24 trillion company, which is close to $8 million. 8 billion. Of the 24 trillion, close to 14 trillion is in Uganda's government bonds. So for a moment, take a step back. NSSF sending out and say we can no longer pay you because someone has refused to pay us. That war will take anyone else. You know, they say Uganda, we have nothing to fight for because we have something to eat. So you can imagine 1 million people told that they no longer have their NSSF. They no longer have their pension. Think about it that way. Because here we work for pensions. Even if you shoot me on the street, either way I have nothing, I will fight. 3, over 30% of the treasury bonds in Uganda are owned by international investors. International power. When you look at the JP Morgans of this world, the big investment banks, and most especially now, for those who follow the finance world, the big private capital companies, who knows the Apollos of this world, the Blackstones. The BlackRock is so much actually main Wall Street. I'm talking about those who are Main Street. They have those mutual funds and investment funds, which they have a higher yield because they're telling you, we are willing to take a risk to invest in, they call them frontier markets.
Yeah.
What they are meaning, we are sending you money to Africa. Because, yeah, they have understood that these countries, 30 years ago, the first treasury bond in Uganda was issued in 1969. 56 years later, I don't know if I have someone who is above 56. Right? 56 years later, there have never been a single default. And the default is defined this way. That a time comes when you have to pay a coupon, you don't pay it for more than 30 days. A time comes for you to repay your principal, you don't pay it for more than 30 days. There has never been a single default, no matter what politics of the day we had. 30 years ago, the only data the investment firms had was just a 15 to 20-year data set to say, how do the countries operate? Because we had just started getting independence in Africa. Today, the investment managers understand they have a 50-year data. That is a country that has matured. A country like Burkina Faso, is it Burkina Faso? The new salute gentleman, right? I was talking to a group and they said, but Kakande, we might go Burkina Faso. I'm like, oh, don't worry. Let's look at it. Let's look at Burkina Faso. I don't know if I can get it quickly. But the point here is, the gentleman comes into power, everything, suspends payments for 60 days. It creates what we call a default. He stabilizes the country. He borrows to pay back the loans. So if the country like Burkina Faso, how do I even spell it? Okay, I'm clicking whatever just came quickly to me. This is a Burkina Faso Treasury bill. It's not Uganda. When was it issued? It's maturing. It's a Treasury bill. It's maturing in October 2025, which means it was issued in 2024. Data online for them. But that was issued. The gentleman came in power in 2023. So if you are seeing something of 2025, it means it's continuing. Actually, Burkina Faso is no longer on the risk of default. It's actually now they call it stable. You can now invest. So when you think about it that way, for two reasons, the money will always protect its own money. So for as long as the international investors have put money back home, I would be like, they will do anything possible to make sure that country will always pay. No matter who will be in politics. So that puts that, but that doesn't take away the risk. But the biggest understanding is, for as long as the pension sector in Uganda and the banking sector is heavily invested in the treasury bonds, that's my biggest assurance. That to default from Stanbic is to default to Kakande. To default Stanbic is literally to tell people in Stanbic, Stanbic is to tell people they don't have their money. That will ban any country whatsoever. I will sleep without getting bothered who is leading us, knowing I have my food to eat. The day you tell me I have my treatment but I can't access it, it's a different case altogether. But most importantly, is understanding how treasury bonds work. When you read the budget, any budget, even in the US budget, whatsoever, there is always an element right now they call refinancing of securities. Refinancing of securities is an understanding, is a simple concept to say, and this I'm speaking about it from an investment side, not so much from an activism side. That we know In Uganda, 5 trillion is maturing this year. Let's issue a new bond for the next 20 years to pay these people. So now, Kakande's bond is maturing, but for him, he might be exiting. So let's pay him and let's get Brian to sell Brian a 20-year bond, and we continue with Brian. The day Brian's bond will be maturing, Brian's kids will be excited to buy. So we shall pay the father, and we continue the journey with the kids. Why is that possible? Because you cannot put a time element on a country. I cannot lend it to a person. Sometimes when you're lending money to someone, you sometimes assess, oh, do they pay me? They have borrowed everywhere. They are getting old. The chances of them making money is, I'm not lending someone 65 years and above, right? To a country which is 50 years, they are calling it a very young country. That means you almost, as long as you sit back and be like, the sovereign that is Uganda will be there in 100 years from now. That means that country can issue a 100-year bond. That's why in countries like Japan, they have a 50-year bond. Because they know it's not going anywhere. It's a matter of saying it's a refinancing. The only question about refinancing is if the maturing bond is cheaper and you end up borrowing more expensively to pay. But beyond that, that's why you see every single year the biggest line in the budget of Uganda is not security, it's not education, it's not health, it's treasury bond refinancing. Now, I don't know, I think I might have deleted that data, but we can get it quickly. But as we get it, I had a question there.
Yeah, I was asking about Thank you. Bonnie Melinda is my name. I was asking about the issue of the Rule of 72, how it applies to treasury bonds. Is it after the withholding tax or before?
The Rule of 72, the compounding rule. There are things which we can understand from each quarter. How do I explain this? When we were studying back in the days, there are things they told us you can only, when they're teaching us math, like you do it this way, you'll get to the answer. You divert from it, chances of you reaching the answer is you are off, right? The Rule of 72 is an understanding of how your compounding is, right? But it's not always going to be the Rule of 72. Your understanding should be as simple as this. As long as I have capital and I want to compound, your goal is how fast can I make back that money fast? So every single time you are investing, because if you're investing at 16, 17, you're going to make that money back in 4.5 years. If you're investing at 15%, you're going to make that money in 5.5 years. If you are going to invest on average at 13, 14%, you're going to make that money in 6 years. Now that's the 72 rule, which is the 6 year. Actually, that's the 6 year period. So, but in Uganda, the rate we are making, especially if you are buying a 10-year bond and above, after tax, you should be making that money back if you compound in 5.5 years. Yes.
Can you repeat the question?
The question, how are interest payments taxed, right? Yeah. That's something. So they are taxed at, it's one of the things where we call they are taxed at source. So if you make, maybe let me bring back this. So you see, let's go through a little bit of this understanding of this graph because it's important to this structure. When you have to buy a treasury bond, now we call them treasury bonds. We talked about those, if you buy a 5-year bond and below, 20% withholding tax. If you buy bonds that are 10 years and above, that is 10% withholding tax. Now, I personally recommend, except otherwise, I recommend people to buy 10-year bonds and above for the tax element. But except if you sit back and say, Alex, I need this money in 3 years, and your objective or your goal is fully structured that in 3 years you need that money. That's when I'll be like, yeah, you go and buy a 3-year bond. But sometimes you're going to be even better off to put that money in a unit trust. Because your goal, you don't know when there are people who will tell you, I don't know when I might need this money. I might need it in 1 year, or 1 year and a half, or 2 years. Like, for you, just go into the unit trust. You sleep happier whenever you need. Because sometimes someone can even wake up in 6 months and they need that money. There, the unit trust helps you. It addresses that risk. But most times, the reasons we invest are literally like 4 or 5. The first one, if you're starting to look into retirement, you're like, let me invest something that will take care of me when I retire. Many us who come to the diaspora, we always say, I'll go back and retire in Kampala. When I reach 45, 55 there, I'm tired. I want to go back and retire. You only go back and realize, I need money. I didn't plan it better. Why? Because the only thing you planned back home is a big house. Then you realize that house will not feed you. You need real money. And that's why one of the fights I have with the diaspora, that before, when you are sure that you are not yet ready to go back home, especially for more than 6 months in a year, don't construct that house. But I know I'm going to come back to that. So, for the goal, I'm coming to you. For the goal, you're going to have to buy 10 years and above. So, you have to know which bond you are buying. This bond is a 20-year bond, which has 17 years to go. Then there is this friend of ours here we call the coupon. That's the coupon rate. It determines how much you get paid every 6 months. Then you have a very important number here, which we call the yield. Now, if you are learning treasury bonds and you are going to enter it, that's the most number you should pay attention to, the yield. Forget the coupon. The yield is very, very important. That's actually your actual return. And in every investment, rental yield, dividend yield, capital gains yield, that's what we are talking about. That's your actual return on your investment. Because it determines what you pay. You can see someone's getting a bond of 30 million, but they are going to pay 28 million. It's because of that yield. So literally they are saving 2 million right away on day one. If they had 30 million, they would get a bond of 32. It increases the money they are going to be making. So when you are engaging in the banks and you are starting to buy, I tell people, do not ask what is the coupon. Ask the person what is the yield. Right now, if someone gives you a bond which is 15 years and above and the yield is not 17%, they have cheated you. Simple and plain. But your question is these cash flows. When you buy a bond, we have to give you a structure like this. It has the debts and the cash flows. The first cash flow is the gross return. That's before tax. So that for every single year, before every single 6 months, before compounding, this growth has nothing like to do with compounding. It has everything to do with what you get paid. So you'll be paid 2.2 million. They take off 10%. You get your 2 million after tax. That money will come on your account for your investment. So when you are buying a bond and your goal is to say, I want to buy bonds which pay a 10% tax, you have to make sure you know, even when they give you that schedule, you look at it and be like, let me compute. Actually, that's 10%. Otherwise, you end up buying a 5-year. There are times I've seen people, they just go to the bank, I'll buy a bond. Which bond do you want? But I don't trust Uganda. What bond? Give me a 2-year bond. You look, they get a 2-year bond. Then they're like, but why am I paying too much tax? You selected a 2-year bond, right? You didn't get a time to define what you wanted, and the bank will sell you whatever they can sell to you, right? So that's the tax element. No, you have to pay tax.
What's the question?
If you are to reinvest, are you reinvesting a gross or net? No, you are reinvesting a net. For the government will take the tax. That one is deducted at source. Whatever comes on your account, it's after tax. You get 90%. Yes, sir.
Amannya agange nze mu biru Steven. Kakati ekyange kibuuzo kikwatagana ku inflation vis-a-vis the interest rate. Nazzemu simanyi how much discussinzeeko ko how much ogeddeko nga sinnakutuuka. Inflation entegenda kujja n'erya ku returns zo wandibadde ofuna mu bond egyo oba investinzeemu. Because
I think now we have like more than 10 people who have just come in. What is the Uganda's inflation right now? Where can I get it? Let's look at the data, because if I give you then my numbers, you believe, maybe as Jam Mutwe. I know it should be here. Where are you? Savings, foreign currency, interbank. Where are you? Where are you? Where are you? I know it should be somewhere, because Bank of Uganda. Okay, here. No, it's not actually. Oh, they publish it this way. How do I explain it to you this way without losing you? Okay, it's here. This column here, column 20. The 3.1, 3.44, 3.8, that's the inflation, right, in Uganda. Sometimes it can even go as high as possible, like that. Let's go back to 2022, where I think it reached 9.2, 10.4. You remember 2022? And that had nothing to do with Uganda. It had everything to do with the global. That was after COVID. That was the Russia war. It started in October 2022. Ukraine, and then everything skyrocketed. Then the economies had to struggle, almost each and every economy. But let's come back to where we are, and we shall address that 10%. Maybe I should even start from here, where they were 10.7. Every time you are investing in a treasury bond, so let's assume you get a 15% standard, which we said you get a 15%, you should be. It's good to go, and the inflation is 4%. You're making a real return of 11%. But let me even stretch it further. Inflation has nothing to do with the product. It has everything to do with the country. When they say inflation in the US is 2.7 or 3%, 2.8 right now, tebagamba nti yabasawo kati ba engineer tubakolere yabwe 2%, tebagamba kati aba real estate tubakolere yabwe 4%, mwenna muli ku 2.8. Ebintu baba birinya bei at 2.8%. All of you, when you go to Walmart or whichever you go to, and you find the prices have increased, or you're buying food prices or anything, they don't ask where you got the money. They only care about what you are using to pay. So one of the misconception is the understanding that inflation impacts the financial assets more than any other asset. That's not true. Inflation eats away from our bigger concept, which was the actual return that you have on your investment. So let me even be what I've gotten on to be known for. You invest. How many people here have invested in Airbnbs in Kampala? Hey, Mwemuli, how much money do you make on your actual investment?
6 years ago was pretty.
Because you guys were very few. Now everyone.
Right now it's saturated rapidly.
Yeah. But let me ask you the other maybe different question. How many of us are invested in rentals back home? None. But one of the reasons, and even if you, and I know this is where Brian was like, kakande, you are, but let's look at it this way, right? Let's look at it this way. And where I blame the Basama, and deliberately, you are part of the reason why the our housing market is highly premium priced because you can have access to money quickly, so you are willing to pay whatever price it is. And especially oba tuli nnyo nyine tubaye Kampala waliwo ekitugamba nga tonnabaweza byapa bya ttaka 10 tomala n'olyoka ofuna namba z'ababulooka nga 10 bakubira mukama wange waliwo akasava kammeka 3 15 bakwatako 15 ne basasula mpola. Like you don't fear debt. You are willing. Why did you buy that plot of land? There are brokers, developers right now who are fully dedicated to the diaspora because they have understood whatever the price. Why? So in that regard, you end up. Let's look at the numbers. Some of you maybe you may even have this data more than me. An apartment that you have constructed, if you had come out, I would recognize him. I video one time with one of the bloggers. In a Zimba apartment, say Chira. Nagamba, Nzecha, Echeyo, Chifunyem. I think it has taken like 5 years. I've spent 800 million. I did them to a very good standard in Chira. 800 million. Namuzo soloza sente mmeka nti ya katubuli ziri apartment wa 10 abuli apartment bambe emitwalo 6. So that means he gets 6 million in a year, in a month. In a year is 72 million. Now that's a lot of money. But botekako management fees and repairs but even abina katuyeso nyiwe kangambe tosasula musolo you run that apartment for yourself and everything. You have invested 800 million to get 72 million. You are getting 8% return. That's why I said I know he is in Boston, but I'm using a perfect example, right? But apartments that over rental units, 200 million, 250 million. And you're buying it, and someone tells you it's earning a 2 million income every single month, which is 8-9%. Now there is another fallacy people say, but forever. I'm buying a 25-year bond at 18%. It's 25 years. That is also forever, for heavenly sake. And they're like, but no, it's not forever. It's 25 years. Then I ask them, have you seen a 20-year rental? Ngemazewe myaka 2 webefanana. Nasende mekazo sobolo jijjamu. Bobato inacho jitaddemu. That's one. 2, I know I'm in the right room. When you are to buy land and someone says there is a house on it and there is no house on it, do they demand the same value, that land? So that fallacy that, but land appreciates, of course it appreciates. When there is nothing, that means it has a wider opportunity for someone to do something on it. If someone comes and they have $1 billion and they want to construct apartments on that plot of land, go inako apartment for $1 million bibiri. Aja ganze njagala plot. Bobo yagala rentals zo zitwala either wengena ziko now. So why would I pay a premium for this, which has been there for 10 years? That if I'm to even repair it, if you got a bad engineer, but they are foremans, you're constructing a terrible unit in 10 years, you usually want to knock it down and put something new. Your actual return, considering all those things, is between 10 to 12%. I'm making 16% after tax for the next 25 years. That even if we are to compare and we just equalize and we say, okay, it makes sense, let's put someone in rentals. You put 500 million in a house as a Musama, and you put it on Airbnb. No funny manager. But the ways that was a million each. I don't know, Sanyuka, Awanang, one of your singer. Omako was a million coming up busy. I want to take $1 million in return. Omuntu akuta $1 million is the same exact money, and they are willing to learn it better. They go to a unity trust. Let me even go to a unity trust. Now again, and not come unity trust. nafuna million nkaaga in the same period. Now what they Kampala manager are collecting their 12 million has created the account. No lya nosoka noga kandia kweza amanyi gange nyumba yange yino kanje bake muno je bakamu that month tugenda kola. Ona ina million nkaaga agenda renting nyumba y'omulala atali Kampala amweyeko just million 5 for a full month and will have a full blast asigazeho million 5 mu 5. So over a 5-year period agenda doubling his 500 to a billion nga gocha ina chiskeleton kyewateeka eruzira because wayagala nnyo okuzimba ennyumba buli omu azimba. To build real wealth. I know Brian won't be. I told him I can't change my character. I don't know if he'll bring me to Dallas, but I know I will be there in Dallas. Come and buy and buy. I have to spread the gospel. But the point here is, right? I prefer people to learn to be loyal to their money. When you go to real estate, your question should be, I'm deploying this much money. How much am I making from it? If it doesn't make sense, okay, don't care. But there is another important element, and I'm going to speak about it, and I know we are in concept real estate, right? Yes, ma'am.
Yeah, I have a question. Ogambye nti aba investing nga ne bazimba ebizimbe tebafunamu bulungi kati now oyinza okuba you can have that a certain amount of money, but when you go to buy something it will be even more money too. So oli alina ekike ataddemu the building ndowooza nti naye aba afunamu kubanga like the way you are saying you are discouraging people who are building.
Okay, let me answer it this way before I come to you. Okay.
Mwami Kakanda agambye olaba tatu discouraging agula nnyumba oba kuzimba nnyumba. Kyagezaako tugamba nti bw'obeera wano n'obeera Boston n'ogamba kangule ennyumba oba kanzimbe ennyumba natogenda kubeera Kampala like in the next, you don't go to Kampala like in the next 6 months oba guli omwaka ogujja togenda Kampala, ennyumba yegenda kusigala awo nati wali agibeeramu. Anjukira okujjako ettaka ennyumba with time it depreciates, ebintu birina okubeera nolina obikolako nawali kyolina okutereeza ku nnyumba. Kyatugamba nti no before wogenda e Kampala, okay, that was bwe nkitegedde like ndi wano mu America esente zange kazibeere nazisobola okukola ekintu nazisobola okumultiplyinga. Bwe ngamba nti no ngenda ku retiringa like I'm going to retire in the next 5 years, nyinza okukola strategy nenzimba ennyumba like maybe nengamba zino sente zange zirimu I diversify sente zikola then waliwo ne sente zoyina nogamba nti no kanzimba ennyumba oba kangula ennyumba nosobola okufuna ennyumba. Kyagezaako tugamba nti esente zonna don't put all your eggs in one basket. Don't just say I'm going to buy land because it appreciates, but he wants us to diversify and make our money work for us, because sometimes the changes okumanya nti esente zaffe zisobola tukolera natwebase. Kyagezaako tugamba not every time we have to put in the work. Sometimes someone else has to put in the work for us.
Let me also add in something on that. I know I have now a more diversified community. If someone is ngamama nagamba nti nze myaka gye nsinatera okudda e Kampala, nze omugamba okay, just put that house because sometimes that's the peace of mind you're looking for. Whether that money is going to make money or not, right? Like for you, it's now more important. But you are 35, you are 40. Chances are you can sit back and be like 45, 50, even let me say even 50-year-old. Chances are you can easily be like in the next 15 years, I'm still day in and day out. Ochifuna? No. That's where I'm coming from. 10, 15 years, nchali kucheyo. Because you are still in the age of where you have to be making money. not to put money where it's not making money, especially if you are not there. That's the concept I'm bringing in, right? It's the concept I'm trying to introduce to the people. There are times when what you must be chasing is where do I make the most money? How do I double my money? I have a client, I think she might be listening in because I know everywhere I go, she's like, I'll tune in, right? In 2023, at that time, I was so much active on Twitter. And that's when we started interacting. Her first goal was, I want to construct a house back home. She's in her early 40s. And like very many of summer, that's a concept we always have in our mind. At least previously, many people, that's one of the goals. Then the first question I asked them when we were interacting, not the first question, it was one of the questions we had was, how often do you go to Kampala? Like, once a year or once every 6 months, but maybe for 2 to 3 weeks. I'm like, okay. When you go to Kampala, what is the most important thing? Is to live comfortably. Like you want to go back home and live like, for lack of better word, if you're a lady, live like a queen. Like, yeah, I need to blast off if you're German, like I need to show, like in the summer. Constructing the house isn't the smartest way. We sat down and came up like, how much were you trying to put down, you and your husband? And they said, no, we're trying to put a good house, buy a plot of land that was potentially going to be in Garuga, a good house in Garuga with the amenities they wanted, around 400 million. So they're about to deploy 500 million in a house. I'm like, if you give me that money and I deploy it for you, every single year, how does that sound? You're joking. Okay, let's now flip the question, because at this point we are trying to simulate a situation that makes her feel like what's better. But if I can guarantee you in the next 10 years that you will sleep in the best hotel you want to sleep in, or anywhere you would want to sleep when you're in Kampala, while at the same time your money is growing, would you take that option? They're like, yes. So we sat back and come up with a computation. That was 2023. That 20-year bond had just come out. It came out at 15, then it increased to 16. So we got the money. The good thing, they had got some of the cash. They deployed all the money. In the 2024, we made it close to 67 million. When they were in Kampala, I told them, I'm okay to pay for your Serena. It's okay. You can go to Serena. Like, no, I don't need to go to Serena. Like, but I want you to enjoy your money, because that was what we agreed on. Choose where you want to stay. They went to Speaker Apartment. Now, someone who is staying at Speaker Apartment for a month is living a better quality life than someone staying in Garuga in their own house.
Yeah, true.
That's a fact.
Yeah.
Someone who has lived at Speak Apartment in a month, you cannot spend $4,000 in a month in rent. If you say, I'm going to stay for a month, it's around 3,200. Maximum. I think if you select nowhere on the nyon, bakuwa wagura nnyo biki ewampewo 15,000 teziggwawo 15,000 ze million 18 nenkwata million 2 netuzime kati zino kulya zizo oba okola ki ku million 67 and we reinvested 35 million. When I report here end of 2024, nga tuvude ku 500 million na tugeze ku around 540 olwo nga amaze obere Kampala to spend ze kuwasula tukoze eki. Like, oh, wait a minute. This is actually sweet. 2025, they went in summer with the family. Choose where you want to stay, because I know in Kampala you can spend whatever you want to spend on the best apartment, for as long as it's a full month, and you will cap you to a maximum of 2,000, 3,000, maximum 4,000. But your money you are going to do was going to lose 6. So it's growing. So, and our projection is by 2032, we shall be at $1 billion. So at that point, even if wakwatako million bitano nagenda nagula ennyumba, I'm okay because I'm creating some an extra 500 million to continue the journey. That is a smarter way to acquire that house. We don't buy houses because, okay, the times when we buy houses because that is the inherent need. Nze napangisa tombulira nga sinafuna nyumba yange kufukako landlord tombulira kirala. I cannot solve that issue. But when someone is a little bit more open to the ideologies of finance, omugamba, you grow that house, don't buy or don't construct that house, you grow it. Your inherent need is, I don't need to worry every time where I'm staying. But whether if I can afford to pay where I'm staying, I will never worry. If I can afford to stay in on speaker apartment, some of the best osanga omusama nga yaziba ennyumba ya miliyoni 8 yakikola bulungi erikira n'ogenda n'ogimupangisaako miliyoni 3 omwezi $1,000. Ate nga yemu agamba nze natega ssente e Kampala tajja tulonda ssente eya BNB etukoledde miliyoni 3 katika miliyoni 8. Niyerabira if we play it differently, that 800 million is going to make him way much more money that in 5-7 years wanatukira naye kati nzizeeyo e Kampala. There is that assessment that at one point you have to go back to Kampala. If you are below kati omusama, it's a different case altogether. Until you are sure you're ready to go back to Kampala, especially for more than 6 months, do not construct a family house back home. 0. Grow that house back home. Investing government in emyaka 50, maybe chances are in 10 years by 60. Chances are nja kudde Kampala for around every 6 months because we have a college. At these 10 years, what has no sense what ogenda okuteekamu kuno ekiyumba kigorofa ozi investing. Mpola, let it give you the 16-15%. Every 5 years, double that money. About $1 million in 5 years, you at 5.5 years, you at 600 million. In 10 years, you at 1.2. Now, in 10 years, quite a million is obisatu. Obabina, kendo gule jijo gendo gula. Okwate million olusambu lunana, zisigalenga zikusasula. Ojja kudde Kampala ng'ofuna million 10 omwaka. Nga you're not even worried lwaki okyali ku kyeyo every more and because you're making almost 10 million. And I did that presentation one day to the diaspora. It was online. Olina Ambuzaga, but what if the houses, they appreciate in value? Oh, okay. How many of you, I know you might not raise your hand, but how many of you are comfortable, are sure of the numbers, the cost of the houses in Chigo, Mirembe Villas? A 3-bedroom house. What's the price of a 3-bedroom house right now in the Mirembe? 250? 350,000, 350 million.
350 million.
350 million. No. Chico Mirembe. No. It's around 500 to 550. Because the 4-bedroom is $200,000, so the other must be $150. Chino, gendo chikoreko research. 8 years ago was afulumira abasamwe mwazigulire nnyo. How much were they? Which is that right now. Kitegeeze yagula wali ng'agamba banne zigenda kulinnya ebbeeyi yatomera. These are absolute facts. Kangende abasama balaaje muguze tugende ku Palmalina. Zafuluma off plan 2018, 2019. Zafulumira 3-bedroom, zafulumira ku Center Bank. That was 1-bedroom, not 3-bedroom. 3-bedroom? No. In Garuga? Palmarina? $300,000. $200,000 mu UGX.
The apartments, the apartments start at 65,000 for 3-bedroom.
350.
Yes. Okay, they had bigger rooms. $65,000.
65,000 was 1-bedroom unit. Yes.
A single family house of a 12-bedroom.
Of what? How many bedrooms?
Used to be at 280,000 at the initial stage.
That's actually the price.
Which, yes. Then right now they started selling them at like 350 something.
Yes.
Then the apartment blocks, like a
Mhm.
2-bedroom, they used to be at 65 and like 70.
I want the 3-bedroom.
Yeah, a 3-bedroom was around like 80 to 90, around there. Depending.
Mu 2019, apartment block, mu 2019 off plan,
Around like 70.
no, it was actually,
92.
yafulumira ku 92.
92.
3-bedroom, yafulumira ku 92. Ekigendo kino nye 20, at least, I don't have that data. Yafulumira ku 92 off plan. Because 1-bedroom was around 54 to 65, depending on where you wanted the 1-bedroom. The 2-bedroom was around 72 to 85, depending on where you wanted it. The 3-bedroom on apartment, bw'ojja okuma okulinnya waggulu, yatera ku 92 ng'egenda erinnya. Genda okitunuleko essaawa eno price kwe ziri. Between 120 you can get that apartment. But they are now 7 years that have passed by. What am I bringing out here? And that's why I'm using the examples of the Basamas. Let me even be a devil's advocate here. One of the biggest wars I'm dealing with. Abasama bebasinze mu 2021, 2022 bebasinga okugula nakawuka. Era kanjogereko. Kasanje nakawuka for 2 reasons. All the one who had the money, especially 30, 35 million, who missed out on the Garuga, was told Kasanje is the next Garuga. In 2021, Museveni naye n'akola ensobi n'afulumya leeta ng'egamba ekkubo y'essaawa. In 2021. Ekyo ne bw'ogendako mugenzi ku gundi online ogenda ku Facebook and you search, you put in nakawuka plots and you see 2022 prices. Ojja ziraba tetukayanire ebaagwa tukikoleko wano. We are going to search it together. Let's search it together because these are the simple mistakes people they were some make.
That's true. We don't have the knowledge, and thank you, Seba, for sharing. This is a very good almost transition because of time. As he finalizes with that, we want one more question before Mr. Okay, we'll do 3 questions. Then Mr. Kayongo will come in. I think the lady has not said anything. Let me start with her. So as you're doing there.
Yeah.
Okay. Thank you, everybody. My name is Mercy, and my question is, I'm looking at the yields between the Treasury bonds and the corporate bonds back home and the potential risks for the two.
I'm listening. The yields between corporate bonds and the Treasury bonds. The yield, right? Yield. We do not have corporate bonds in Kampala right now, unfortunately. But at least right now, the market is picking up that what we call fixed income, and it's something that companies can embrace. A Kampala right now, if you have to invest in fixed income, you have either unit trusts or Treasury bonds. The good thing, right now, there is an expansion of those products. We are going to get the diaspora bond. They are very happy they are bringing that because now they are realizing the Kakandes are preaching the message. Some are starting to ask, so where else can we put our money? So that is going to come. The green bonds, there are people who forever will always be like, I only invest in something that is green in nature and whatever. They want to tap also that. The Muslims have been feeling left out. They are saying, okay, we are bringing the Sukuk bond. Also, we want that money to come in. So they are coming. Hopefully, even maybe in the next 2 to 3 years, we might see more corporate bonds, corporate entities. Because right now, the Kenyan market, we saw the Safaricom issuing a corporate bond at 10%, 10.8%. Yeah, 10.8. And if they had gone to borrow from a bank, they would have borrowed maybe at 14, 15. But what was interesting about the Safaricom bond is they wanted 15 billion Kenya shillings, which is like 300, 400 billion UGX. They got 40 billion Kenya shillings. That is over 3 times what they needed, over 2.5 times what they needed. So if I'm someone who is operating or managing a company, I'm starting to think, wait a minute, the market is actually out there. I just have to structure it very well and do the right thing with the money, and people will give me the money. At one point, the treasury bonds will not be enough to satisfy the demand. Uganda is just starting off in this market. So these other products are coming. I talked about something which we call the real estate investment trust. And one time I was talking to one of the Hajj, who's a big developer. Actually, I can mention him. I know I won't feel bad. And I told him, you need to start seeing your sector from a capital market structure. He's like, I've always heard of those rates, but I don't know. I'm like, it's as simple as saying, you're going to go and construct all these nice apartments or houses and put them, and people buy them, tokenize them, and people buy simple things. So the only question you're going to always ask is, what is our return? You are competing for my money. So instead of you wanting to sell off all the houses at once and then they sit with you for 2-3 years, hey, you don't need to do that. Package them as one. Let 1 million yalete, 1 million billion, 1 million tano yalete. Wagambe every single year, whatever income we are making, we are paying it back to you. We think that has potential if that market elevates and organizes themselves. So, but right now we don't have the corporate bonds. Hey, here I've got the information. Nakauka. This was 2022. 30 to 35 million. Nakauka. Ate ng'agula basama. N'abakuba n'abagamba eweddewo, that was by Easter. Najja n'abakuba leeta eno. The good news is the Katamaka nako kajja. That letter was in 2021. Nagibakuba mu 2022. Ne baga hai basitagula nakawuka. Mpedde tuli mu 2025 teri najja ekkubo. They haven't even paid the people who are going to pass that road. They are just starting to pay them off. Kitegeeza yagula mu 2022 without paying attention to what they are buying. They overpaid. Now, if in 5 years, that plot moves, you bought in at 35 million, moves from 35 to 100, you will say ettaka gotozanyisa ttaka. Likutwalidde emyaka 10 okuva ku 35 million otuuka ku 9 oba ku 10. That is the concept which we are trying to introduce, that do that assessment. Right now, mutajja kugamba nti the future is in Gobero. Otunuulire Gobero eri 35 kilometers from Kampala. Agambe amasannyalaze ogalaba kano kasozi, amazzi gatuuse, broker kubire 20 million oweereze. Not that it's wrong. The question is, have you paid the right price that you're going to get the return? It's not that you have not bought the land. Have you paid the right price? But when I say Nakauka Kasanje, and why I always use those two, in 2021, 2022, they oversold them as the next big thing. And to the extent possible, people overpaid. That a muntu yagula million ya asatu, esawa eno anonya amuwana abuze. Nanonya asanaga no asatu abuze, ze nateekamu kale 25 njazitwala. That's when I go, ate yagiguza kati kwa 25 njazitwala. But this is the future, you know. So the concept is as simple as this. There is money in real estate, extreme amount of money. How much are you paying? If you are paying the selling side of the developers, you are overpaying. If you are paying the buying side of you, where you know you're going to negotiate to the right price, you will make money. The only problem with that is very few people have the knowledge, the skill sets to assess that, and even the time. Ogenda tuke Kampala nga bakulabidde dda ploti, buli omu kuliko ba broker nga 7, buli omu alinze kutega osasula mmeka omugagga yatuuse. So if you do not have that and you can't assess that, that's where the challenge gets in when it comes through your estate.
Nze nga tonavaawo nankamale akange. Which unit trust do you recommend and why? Top 3, just satuka. N'ensonga lwaki?
I recommend all the unit trusts. I recommend all of them. Bannange bandaba. Some of them they are some of my good clients. But without playing that game of politics, I will say it this way. UAP is the biggest. Sometimes being the biggest is a good thing because you are safe. You know, it's right now 3-point-something trillion, so you're not about to risk that. But that sometimes also comes with fees. It's 2%, and people who are investing in UAP, they will tell you they are getting 11-12%. You find the newcomers, the Sanlams, they are 1.5%, but they are getting 13%. You find Cornerstone. Bandaba. Cornerstone will publish, okay, and this is the difference. Cornerstone publishes what we call the effective annual yield. Other companies publish annual yields. Now, those are two different things. And from a selling perspective, that's what I'm saying, Bandaba. So I know what. No. I see Amushia, but all of them will make money. The only difference here, I'm saying that, and someone will fear Cornerstone because Cornerstone is new. Market are more established, right? But at the end of the day, except if you are deploying 100 million in a unit trust, which I wouldn't recommend, someone who's getting 13% of 10 million, that's 1.3, versus someone who's getting a 14%, which is 1.4. Right? But when you enter 50 million and 100 million, now the difference is more. It starts to show up. So there you'll be like, am I looking for the one which gives more return? Or am I even looking where I can easily get a faster service? Do they have a website? Can I trust the website? If I make a call and I want my turnaround, what is it? Which bank do they even deal with? What's the management fees? What track record do they have? All of those come into play. That's why I'm saying they are averagely the same.
Yeah, so my name is Isaac. I have just 2 questions for you. What are the fees associated with buying these T-bonds? And also, can I go directly to Bank of Uganda and I buy those bonds by myself?
I will start with the second one. Now, there are 2 markets you can buy bonds in. The primary market or the secondary market, right? The primary market is you buying a bond from Bank of Uganda, but not directly. Through your bank. You can never go to Bank of Uganda. We can crowd it out. So that's the first one. The only issue is there you buy once a month. You have to know when they are selling and what they are selling. The second issue there is you have to also know what bond you want. The secondary market you can buy every single day. You can get someone who can buy for you and they will charge you fees. The fees sometimes if you are buying, I tell people, if you are buying a bond of 50 million and above, how many of you would buy a plot of land of 50 million without using a lawyer or a broker? Very few people. You will end up using a lawyer at least to do your title search. So if you are buying a bond of 20 or 50 million, and especially you're going to the secondary market, there is no primary market there and then, just get your advisor. Pay him his 400K, 500K, he will always get you a better deal. Because he understands the market, and he has to explain it to you, why are we buying this ABC? Yes. Of the fees, that's one of the fees. Of the other fees is, if you're buying from the primary market, some banks sometimes charge. But that's a small amount. It's 20,000, 30,000. So if you're deploying 10 million, 15 million, 20K is a small amount to pay.
Finally, manyi obudde buyise njagala otukoleremu awo ka illustration ng'oli aguze bond 350 mitwalo 10 ejja dollar tulabe at least the first 5 years.
When they are withdrawing the money or compounding it?
Compounding it.
I don't even need to display it. Every 5 years, on average, every 5.5 years, if you buy the right bond, it should double the money. So we better know dollar kumi no jiteka mukati. By 2030 by around this time, it should be a mitwala abiti. It should be a mitwala.
Thank you. I have some questions, Alex Zenjagalo Kowoza, because I know there's this kind of thing which people have. I know Brian does real estate, and now why is Brian inviting a guy who talks about capital markets and all that? So it's all about scaling your knowledge and having a clear understanding of having a diversity of what investments. And not everyone is going to be buying properties. There are people here who just rent and will always rent, but you cannot be making money more than them because they have decided the different ways how to invest. And for me, with teaching knowledge as a teacher, I don't look at just teaching you just the one thing which I do best, but you have to be vast with vast knowledge and having a skill and extending your knowledge to different industries. Like, for example, we cannot starting discussions in regards to creating REITs in our community. Like, I've seen so many of us in our community are like, oh, we need to combine money together as Ugandans, we buy a building, we do what? How can we start that discussion if you cannot even have a clear understanding of a bond? Because how it trends, how it does what, the return on investment. We cannot even get there to those discussions of talking about REITs. So if you ask Kakande how REITs are done, those are questions also I want you also guys to reach at. I know we focus so much on the Ugandan side, but for example, on the Ugandan side, one of the questions which people have been sending me over there, they want to ask you, and you talked about the bonds and all this. Someone said they invested in MTN. Can you share more and highlight people the opportunity they missed on the MTN shares and Stanbic Bank shares? Like MTN and they invested in Stanbic or MTN?
The stock market now we are entering the equities side. I'm going to do a disclaimer. If someone who is listening in is based in Uganda, yes, we should talk about MTN. But if someone who is listening in is based in the US and you want to learn equities, you have no business to invest in equities in Uganda. The real money machine in equities in the US. Yeah. There is nothing like that. Which company is that? And we have those groups where we're talking about the different call options or the options, whatever, and why? The US is a money-making machine. I actually have talked about the Ugandan side because I know that's what somehow it's very, very important. But I also add this, and to the few might be investing in the US market, the stock market, or those ETFs and whatsoever, that's good. If you are not yet invested in the US market, the equities market, and you are based here, and every single month, broker, come on, the real money is in the US. So, but to answer that question, the MTN went IPO'd in 2022 at 220 per share. It went down to close to 170 by 2023 and it stayed there up to like 2024. However, they have been paying a dividend every single year. In the 2024, end of 2024, end of last year, it started to grow because now there is more demand. Right now, the prices have reached 330. So that means someone who put in 1 million at IPO, their price has almost increased by 60%. Now they have 1.6 million of value in less than how many years? 3.5 years. That doesn't count the close to 50% dividend they have received of their investment in just 4.5 years. That's how the equities market works. In 4.5 years, and if someone bought last year when they did a secondary IPO and it IPO'd at 170, now the money has doubled. In less than 16 months, we have moved from 170 to over 350. So do I take a million as a Uganda kumi? Right now they have 20 million. That doesn't count the dividend they got in November last year, in May this year, and what they're about to get in a year, in March. So that's the opportunity in that. Stanbic, it's the same. It has been trading close to $20, 20 shillings per share in 2021, 2022, 2023. And in 2024, it started to grow. It's now at 50 plus, more than doubled. There is the only challenge when it comes to Uganda, but we are We're just starting on that. We are young. We have how many companies listed? 9 companies. When you take off New Vision, NIC and Uganda Clays, Bank, EABL is listed in the Kenya, they're just cross-listed. I don't so much count it. So they are listed in Kenya, they cross-list to Uganda. So it's a company in Kenya, not in Uganda. So you take off BAT, its price has not moved for a long time. Then you remain with just 5 companies we are competing for. For Uganda, yes, let the people in Uganda compete. Go out and agalo kuiga stock market. Get the people who are doing it. There are so many, I believe there are so many Ugandans in your communities doing it. Eje dola chikumi ozitekenga yo. Muli muziteeka mugundi before wanu kezi mu kama bali mubawa na mugula insurance after insurance police. I can defend my point. I work in the insurance industry. I'm not saying don't buy the insurance policy. Oh, in that day. Let's go.
I have another thing. So, Alex, for me, one thing which I want to share from the discussion which Alex is sharing with you is that in investment, for the years I've invested in real estate, I've got to understand that it's good to be knowledgeable of the investment you are doing. And all the people you are seeing here own all these buildings, also they invest in the stock market. That is the part I don't want you to just be ignorant and be like, okay, I just know when you are investing in real estate. No, doing an investment is you to sit down and analyze and say, okay, I want to buy this building. That's why we ask you, what is it cash flowing? What is the NOI on that building? What is the cap rate on that building? What is the return on that building? All that is the information you are collecting to compare your investment. And being like, okay, I want to buy a building or I want to invest in capital funds. That is where I want you to have a piece of choice. Don't just invest because let me tell you, the first mistake I did in real estate, one of the biggest mistakes, the 5 I will share with you one day, the 5 mistakes I've done in real estate is investing because I like the building. Is investing because I have to buy the building. Is investing because I had the money to buy the building. Then when you imagine you have a commercial building and one principal tenant gets out. Those are the things which people do not want to discuss. But you have to start now getting a comparison and look at and say, okay, by the time I invest in real estate, I viewed a muscle to sustain that particular investment. Even the people you see who own, like let me say, for example, someone who has a commercial building where Home Depot is, what are they looking at? And how are they being able to make money if Home Depot goes out? You know that building will be empty for like at least 3 or 5 years. Where they have not got another anchor tenant to be in that bigger space. So what are the things which they look at and they say, okay, if I'm to own that property, how long am I going to hold it and where am I putting my money? Or if I am making money, the person who is making money from that building, where are they putting their cash flows? That is the knowledge which we have to acquire. That is the thing which you have to think about because yes, your passion might be, I need to own a building, I'm to angambe, arcade yange. Then after you have an arcade, let us assume that was your best choice. You got an arcade. The rent you collected, where did you put it? So you see that? So it's a question to ask yourself, what is your next step when you have the money? Because the thing the biggest mistake all of us will make, when we don't have the money, we have all the plans. When we got the money, we forget the plan we put down.
I will add one point on that. I do not believe you should be loyal to a particular asset. Too loyal, let me put it that way. Even as I preach treasury bonds for the last 4 years, everywhere I go, Kakande, somehow some people say Kakande bonds. I'm not too loyal to them. I'm too loyal to the money I'm making from them. I'm loyal to where I make the money. So if sometimes you're going to enter into an asset and you're going to do the knowledge and you enter it and it makes absolute sense at that time. If 5 years later you assess and say it doesn't make any sense, exit and move to something else. Now, let me even use let me use treasury bonds. Today, if we are making 16%, and it makes absolute sense to invest into the 16%, 5 years later, now real estate, something happens, now it makes sense, exit that bond and enter, because now you have studied the market there now. Or you buy a bond for 200 million, but then in 3 years or 1 year, a deal comes that makes absolute sense on a building. You have to co-invest with other people in a commercial building where the rental yield alone is way much better than sell that damn bond. Do not listen to Kakande. Sell it and join with your people and buy that building. The point here is, as you seek knowledge, your first primary objective should be, let me make the money. All those, that's what I'm saying, that you have to, when you understand the market, yes. So even when I tell people that I'm into bonds and I preach bonds and I preach equities, I tell people I don't preach them because I'm loyal to them. I preach them because they first of all, few people knew about them 3 years ago. 2, they make money, they have a low entry barrier. But 3, tomorrow, if they don't make money, I'll be the first people to say, guys, it's time for us to move now. Where next? I'm trying to even advocate for things like the rates, because there will be a game changer in Uganda. It won't need for us to buy those small plots of land. If you have spent so much time on TikTok, you have seen that now they are selling 50 by 30. Now, take a step back. You buy a very nice plot of land in which place should I use? Nakwero. That's another good place where the Basamas are buying a lot. 60 million. You buy 100 by 100, 120. Very expensive, but let's assume it's a very good investment. Then a Kakande, very loyal to their money, they come and buy a 50 by 100. Nanonya babuguza. Nabaguza asatu kwana. Bakaba kuzimbira wo obuntu ku plotia. No jeno nga mukama katonda. Like, can't I have something that is well planned? You know? Why? For them, the person who is doing that understood for them, they bought that plot of land not because they are buying it like they know it makes money like you, or they want to put a big house. They bought it, subdivided it, and sold it to the Kadamas, also for them to have a residence. So when you take a step back and be like, where do I make the money? How do I collectively make the money? Not everyone is going to invest in treasury bond on themselves. And that's the fact. I sometimes believe now, Brian has done a very good thing that he has brought a few people here to listen to the bonds, and maybe you like them. Like, collectively create a company. Get one single manager. Every single month, push that money as an investment back home in that company. Every 6 months or every quarter, sit down and get a report. You don't need to struggle. That money is coming to you fully. You have established a company here in the US, it opens up something. Now, this someone be like, the people who have a lot of money, they don't need that. You can amass a 50 grand if you go on it on yourself. But there are people who just have every single month $1,000 and like, I don't want to do this. And the unit trust is going to just lock me in at 11, 12%. How many are we of 1,000 per month? We are 100 people. That's 100 grand a month. Get one single manager, establish a company, or if you have the same equity, get the leadership. Every single month, let them deploy that money. Let it make money. Every single month, every single quarter, they report to you. Sit down. You will grow. You will have so much synergies. And every time they say, oh, no, I want to exit or whatever, they'll be like, 1 month's collection is enough for you to go. But that machine you have, you are oiling it out. I preach that side because you have the community. You have the numbers. No way bibiri ajje. No olukumi ajje. Kati onatagala kola too much work. Kale, omuntu alinga ono atagala kola too much work. Kati automation yammwe is in the numbers and in willingness to do that. You incur what? So that's an idea where I tell people, and I told Brian, one day you need to start mobilizing, get to the first five. Obagaye muje tugende. Because the more money you have when I'm selling a 50 million bond and when I'm selling a billion bond, it's a different price.
How much do you charge for a billion?
No. It's not in the selling. Let me put it. I hope I don't show you people's information. But what I mean by selling is this. Let it come back. No, not the fees. It's not the fees. Now you're asking the wrong question. You are asking the wrong question. Let me. I want to show you something to see why sometimes it's even much better to go as a collective, especially for you people who have a community.
Like a REIT.
Yeah, I look at it this way.
Investment.
Where are you? I want to show you one of the deal I did this week. Because some of those things, okay.
Alex, as you're showing us, also, I'll add on to this. I know in our communities, we have this thing of like, it takes a journey for someone to understand the unit of working together. Because most of us, we have this character like, okay, if I have a billion, I have a billion by myself. But I think the thing also we have to learn is that even if that's why Alex was saying, you have 200, you have 1,000, you have to collaboratively work together and put that money together. Because if you have a company which is worth like 10 billion, your presentation of in any place, it's different from you just having by yourself, like with just 200 million shillings. You get what I'm saying? 10 billion is different because your force of power doing something. Like, for example, even Alex can tell you this. If, let me say there's a bid, a 20-year bond is being put, there's a bid like with the Ugandan government. And we come and we say, okay, us as the aspirants from Boston, we have raised 20 billion Ugandan shillings. And we want to put a bid and we say, okay, I don't think they will give us the same rate which they give everyone. You bid at a different rate. You have options to say, for us, our 20 billion, we want it at 18% or want it at 18.5%. What you see, the rate which they commonly give is what they call the lowest average rate. That's what they give to everyone, and you see. That's why when you buy below 200 million, that's what you get. But those who have put money together, now remember, now your money is not just getting what? The 15% and all that. Yes, Ali. So go forward.
You can see the numbers here have changed from the numbers I was presenting.
Wow.
Right? That is a 2 billion investment in one single go. 2 billion. Right? UGX, okay. No, not dollars. But two things I want you to note. Oh.
Come decide. Let's use this side.
It's okay, I'll stay here. I can see it. Someone is getting a 2.2 billion while they have just paid a 2 billion. So they are getting a 200 million in a discount. They are getting a 2.2 billion while they have paid just 2 billion. So 200 million in one single go is for free. Okay, it's not free, it's discounted. Let me not call it free. They have invested. Very few people can do 2 billion on themselves. But somehow, if I get 50 good Boston people, I think they can easily raise that money. Good 50 people, and they say, let's do this. Every year they will deploy, or every quarter they will deploy a 2 billion. And every time they are deploying the 2 billion, they are getting 200 million for free. Let me use the word free because it's the discount, right? Yet that person, if they are to go and invest for themselves, they're going to get a very low yield and they will just get a very small discount. Now, it's still good, but the big numbers, when we are selling off bonds, or when we are doing, not selling off, when I'm brokering bonds, the more cash someone comes with, even me, I go to the market differently. Because I know I can even pull off a 300 million. I wonder, 3 months ago, we executed a 5 billion investment for someone. Yeah, there is a point which I didn't talk about, and now this is the perfect time too. Someone is in this US, they are, especially you might know them, but let me not mention a name. Very wealthy. They took equity from their commercial building. They took equity, yeah, which is mortgage, on their commercial building, and they raised $1.4 million. Why? We had worked out the numbers. They can get that loan mortgage at around 5% plus or minus, depending on how the rate keeps changing. And we said, okay, what's the maximum? We assess the risk that the rate of their lending is up to a maximum of 7%. So we took the 1.4, they added off their money, they had a 5 billion. They got a discount of 700 million. So they paid 5 billion, they got a bond of 5.7 billion. The money they make in a year is enough to pay the loan plus the principal, and they remain with almost 400 million.
Let me share something which I think it will be of interest so much for the people who own properties here in the US. We had, I remember during COVID time at 2%, but we had, was it a 20-year bond at 18.5%? You know how many people we are pulling out lines of credit to invest in a bond of 18.5%? That is the part you should think about. You can have your property, which everyone wants to own a property. You have your house. But now the value of your house, which was at 500, now the value of your house is at 700. If you can pull out equity, let me say like over 150,000, but you can invest it somewhere, and that equity can be able to pay your mortgage, and that equity can be able to help you sustain other costs. Is that a bad investment? So those are other technicalities which come along, which people have to understand. Because someone will say, no, I still love my house, I cannot sell it, but I still also want to invest in the bond with a big amount of money. So like, for example, that person invested $1.5 million from a commercial building. What is that other investment you have? You know, you can live alone. In Uganda, we cannot do that, but we are in this market. Yes. This is a different market. That's why the discussions of how you invest in bonds is different from someone who is in Uganda. Because in Uganda, you cannot get a mortgage of 5%. You're getting a mortgage of, on a dollar, it will be like 10 to 12. That's what you're getting. So that's why this is important.
How many people have friends in Europe? Europe that is not UK. Netherlands, German, whatsoever. Do you know what rates those guys borrow at? You should ask them. There is someone who is in one of those European countries, the Swedens and whatever, but also we talked recently. They took a mortgage of £400,000 from equity. They borrowed with using their house as a loan, 400,000 euros, which was close to 1.6 billion. And they invested it, they got the loan at around 3.8%. 3.8. Then they took it home. Let's how is the featuring? Is it because of me or because of you? Oh, shit. This thing is too sensitive for life. It's too sensitive for life. Let's look at the actual numbers, because now this impacts you, especially people who can access line of credit at a very low rate. It's a game changer. Pardon?
Still.
No.
6. He got right now. 6.
So let's assume, let's use someone who can get, let's use what? Who wants to use an example, to be used as an example? Yes. Oh, the lady, she was there. How much do you think you can get as a loan?
I want to use something which is more practical. Because I'm waiting to consult with Mr. Kayongo. Because I use my line of equity, and I get like $300,000 or $200,000.
Let's go there slowly. I want us to look at the numbers. 300,000. Eh? Okay, that's 3 million. What rate do you think you can get?
I'm going to say worst case.
The rate for the line of equity?
Yeah.
I don't know, right now is it 6 or 7?
Let us say 7.
7.
You have a common number every week.
So how many years do you think you can get that line of equity?
It's like a credit card. You have it, you use it, you don't use it.
Let's give it a number because I want to know. I want to use not a line of credit. I want to use a real mortgage, like a loan, because there's something which I want. 15. So let's say 15, right? So that means, and you're paying once a month, which means on that loan, every single month you would have to pay around 2,600 on averagely, and that's both principal and interest. This is, you can go back and check it. This is something which I used to demonstrate that side, right? The loan amortization. In a year, you would have paid 32,000, right? How much is 32,000 in UGX? 100 million. So you get the 300,000, you send it home. How much is 300,000 in UGX?
1 billion.
1 billion. So let's do it. Times 35. Yeah, it's 1 billion. So at 1 billion, let's assume you get a good interest rate. But let me even bring it back to 16.5. And let me even take it and you do it in Jan. Yeah, because I'm giving you enough time to prepare all of that. So you're going to invest, let's say, by end of Jan, right? In a year, you're going to make these two payments. 140. How much money do you need to pay? 100 million. So you have made 40 million for free of just taking a liability of an asset that you already own. So now the people who play with bigger numbers, it gets better. And this is 7%. And here I'm saying you're not I'm saying you're not compounding, you're getting that money out. If it's at 2%, 3. If I put in 3 here, you're paying $2,000, which in 12 months you are paying 24,000, which is how much money is that? $90 million. You just need that money in one single payment, and it's every twice they pay you twice a year, right? In one single payment, you pay your loan, the other one is your profit. But there is something I forgot to add on. For the 300K, there is a discount here you're going to make right away of 50 million, which is like 15,000. That you can.
Which covers
every single month, every single year they pay you twice a year.
Twice a year. You can discount, which is what? 50 million.
50 million. So that is you have to be very deliberate if you have to take this. I'm not going to say go right now, you go and borrow and take a line of mortgages out. You have to sit back and compute it or consult with someone who understands this. Look at the numbers. But every time you're going to borrow, and people will always ask that, but what about the FX? The only time when the FX doesn't make sense, if our dollar leaves from 3.5 or 3.6 where it is, and it enters 4,400. That's when now it will start becoming a ready flag for you to make a profit of this syndicate. It's called hedging in finance. Otherwise, you have literally turned your house into an asset generating machine, and it's paying for itself. So even if you tell the bank, no, I'll pay you every 6 months, you just have to wait for me. It's okay to accumulate. They pay you your UGX back home, translate it to the dollars, send it back home, pay the bank, and your life continues to move. So if you buy a 25-year bond and you get that mortgage for like 10 years, in 10 years you would have paid off, that loan bond would have paid off the mortgage, and you continue for 15 years. That even at one point, if you say, oh, they're about to call it, I'm struggling with 1 or 2 things, you still can sell your bond and pay the guys back, and life moves on. But you have to have sat down and looked at it. I don't want to put it there as a blanket kind of guidance.
Thank you so much, Alex. I think, do you have any more questions? I think those are the questions. Just one more? Okay. Or we'll give you the last question, and then Alex can close.
Do you advise borrowing against bonds?
His question, do you advise borrowing against bonds? No. Yes.
From the bank.
Yes. From the bank, I understand. And I'm going to even use the Ugandan standard where you can only borrow at 15-16%. Yes, I would, if you're going to get a rate that is really competitive. If you can, you see, borrowing is not the problem. No, it's always the discipline for us to pay back. If let's say you have a bond of 100 million, and you borrow, let's say 70 million that requires you to pay 1 million every single month for 5 years, and you can afford the 1 million, yes, you borrow. Why? You're going to access 75 million. Let's even assume that you are playing in the bonds world. You're going to access the 1 million, and sometimes even the bond banks will tell you, you don't even need to pay us. We can be taking the bond. Then the coupon is what paying that. That means they are going to give you your money. It's literally accessing your profits early in a lump sum, and you go and do with it whatever you want to do with it. What that does is, why I say I don't want to preach that much is, people will take it as like, oh, wait a minute. It becomes too easy. I want people also to develop the discipline of growing your thing over time. But when you get that discipline, then it becomes easy. Credit is, when you understand how credit works, things become better. Because if you have a bond of 100 million, which pays you close to 7 million every 6 months. The bank says we can lend you 75 million and we use a coupon to pay us. Then for 5-10 years. Then you access the 75 million, you invest it back to the bond. Now you're no longer getting 7, you're now getting 12. So, and you tell them, don't take off actually 7, take off 12 because I want to pay off this thing not in 7 years you gave me, in 4 years. After 4 years, you no longer have a bond of 100, you have now a bond of 175. You have literally compounded in a short time using the liability versus asset matching. But very few people appreciate that. Let me even use that word, appreciate. But if you understand how those numbers work, it's magical. Yeah.
Thank you so much. Yes,
otherwise, for closing, I don't think I haven't answered any questions. So thank you so much.
Thank you so much, Alex. I want to thank everyone who has been here, and you gave us enough time. I know we finished late, but thank you so much. And if you have any questions, I will share with you my contact. Those who are online, it's 857-300-9033, 857-300-9033. Because I received so many phone calls, this is just a request. Send a text message with clear questions and clear explanation of how I can help you, please. And we will be glad to help you, please. Thank you so much. God bless you. Be well. Bye.